Last stream, I was in the middle of working on it, and I spilled coffee on my computer. I wanted to make sure I didn't destroy my $5,000 computer, and so I, made sure that it was working. Put it in a bunch of oats, so now it's working. It's working fine, no problem. And now I'm back to business. So, real quick, let me go over what I've done so far on this model. My goals, and then what I've done recently, and finally what I'm going to be working on today, which I was working on earlier and got interrupted. Let me make sure, yeah, that's live, so good. So here's the goals for the model. So first goal is I want to beat the S&P 500 by a significant margin, not just by a little bit, and I want to do this in all regimes. So I want to outperform the S&P in bear markets, bull markets, sideways markets. I want to make sure that everything that could possibly happen in the future, I'm covered and this model's going to work. And the second thing is I want to, so I'm doing this in Python, so I want to create a usable code base that anyone can use. So it should just, like any other Python package, should just have simple functions and features, and anyone can kind of iterate through and create their own model. So the outline for what I'm working on is I have a bunch of stocks, and then I want to isolate that down to into a universe of useful stocks. So you want to cut out things that are going to be noisy, like penny stocks or stocks that have really low volume. Once I have a good universe, I want to train that on, use that to train a returns model. And so that should predict, what's the return going to be, or, probability of going up, or some metric. What's the probability of it working? And then feed that into a portfolio model, which will allocate, I'll be able to give it money, and then it will allocate, move around the positioning each morning according to the returns model. So this is the first iteration of this. I've basically been working on this project since the beginning of the year, last 2 days of last year. I started it on December 29th. So I got data from the NASDAQ database. The problem is you have to go download this from the website every day for each ticker, and it's really inefficient. Hey, Sing. I don't have a better model. Really, the good model that I got was on, what day was that? I think it was Thursday night stream, Pacific time, West Coast, US. That's when I got the really good model. And since then, I've kind of just been trying things. I basically have been trying feature trimming, but I found that, any method of feature trimming actually makes the model worse. And then I went through and removed the highly correlated features one by one. I finished that this morning, and actually no feature really improves the results. So I'm just going to finish going over this again real quick. It's probably boring, but it helps. After the stream is done, it turns into a video, and this kind of helps the videos be more viewable, helps hook in the viewers to the videos if I start out the stream by talking about what I've done. But I'll be quick. And so I found a better data source. That's in the description. Once I had that, I went and did a basic analysis. So this is fundamental variables. This is comparing different stocks in a sector, in this case, pharmaceuticals. Both of these are qualitative analysis, though, and it's hard to automate. So I wanted a quantitative analysis, so I incorporated everything into a light gradient boosting method. I was able to achieve 51.5% directional accuracy in the best case. I then incorporated that into a portfolio strategy. I found that if I'm selecting the bottom N number of stocks by volume, the lower N is, the better it performs. So 500 underperforming the S&P, 100 matching the S&P, 20 beating the S&P, and 1 beating it by an even bigger margin. The problem was, to be brief, is that this was a really fragile method, which you can see here in the Sharpe ratio plot. So the only one with a Sharpe ratio above 1 was if I'm only picking one stock per day, and you want a Sharpe ratio above 1 generally for the model to be considered useful. I tried refining it, and the best performing thing was thresholding at 0.54 and 0.53, but if I threshold at 0.55, it's not making any picks. So, but all that shows that the model's really fragile. So the next step, before I get something that really works well, I needed to rapidly iterate different features and targets and methods for the model, methods for the universe, and methods for the portfolio in order to find something that works really well. The problem was that the code base was really bad, and it was basically not usable for me or anyone else. So I spent February, this is where I was at the end of January. And then in February, I spent cleaning up the code base and making it into a really usable tool. I finished that at the end of February. Now we're in March, so I've been looking through the model this month. And these are all of the features that I added. Now the key point here is these are all features on the price data. No fundamental data has been incorporated. And so here's my feature exploration. So I added all features to the model. I found it didn't perform that well. One of the main interesting things I found from this stage was that if I'm looking out into the future, trying to predict the returns out into the future, the further I'm looking into the future, the better the model performs. So 5 days performs better than 1 day, 30 days performs better than 5 days, so on and so forth. And the reason for this is that lots of the price action that's happening in the stock market is happening after the market closes and before the market opens a subsequent day. So after hours for the big firms and pre-market trading, which retail traders don't have access to. So when you're looking out 5 days into the future, you're kind of getting that price action that's happening while the market is closed. If you're doing 5 days in the future, you're getting price action on 4 of the 5 days. And if you sell it on the same day of the week that you bought it, then you're getting price action for every day. This was just looking around at a lot of different things. Here I found that the metric I want isn't just the directional accuracy, because I wasn't really able to improve it. We don't want it to be directionally correct on everything. And the signal to noise ratio in the stock market is really low. Lots of noise for the signal. So you're kind of trying to squeeze water out of stone. And that means that you're probably not going to be directionally accurate. But better than that, you want to look at the information coefficient, the standard deviation of the information coefficient, the ratio of the information coefficient to information, and then this T statistic. I tried neutralizing. I found that improved the model really quite a bit. And so this is the first model that I got that you were referencing. Does your model take into account a black swan event? You think one is about to come? Yeah, well, it seems like it's been coming. I honestly have been feeling that way the whole year. If you look at the S&P 500, I noticed that it started to go sideways at the end of last year, beginning of this year. At the beginning of this year, we had the crazy spike in silver and gold. That kind of makes us seem like we're going towards a market crash. And then the S&P the whole year has just been basically sideways. And I've been really concerned about that. And then as soon as the war in Iran started, the S&P's been dropping. And so, here we are in mid-March, we're almost to April, we're almost 4 months into the year, and the S&P is negative on the year. And so, we're in an AI bubble that's on top of everything, all the crazy global uncertainty. And so it seems basically like it's a foregone conclusion. We're heading into a crash. The question is, how long can you put the crash off for? But I think we're going head first into a crash. So yeah, I'm worried about it. Basically the finding here, so this was hitting the model on every metric that I wanted. The information coefficient was above 0.01. The daily information coefficient to information ratio was above 0.02. The T statistic was above 1.96, and so this is all the metrics I wanted except for standard deviation, which I was initially trying to get standard deviation to be orders of magnitude lower than the information coefficient, but then I found this paper which is it shows information coefficient and standard deviation of the information coefficient over time for all sorts of research papers, and they basically found that the standard deviation is always higher than the information coefficient, and it's usually higher than the information coefficient. It's higher by about 3 to 13 times. And so here I'm getting an information coefficient that's about 4 times as high. Let's see, 0.0229. Let's just multiply that real quick. So we can do information coefficient is 0.0239. And then the standard deviation, 239. And what's the standard deviation? 0.1027. So divide those guys. Yeah, so it's like 4.3 times. The standard deviation is 4.3 times the information coefficient. So actually, this is a really robust model. I'm really happy with this, and I would go forward with using this, but I kind of want to ruthlessly test it to try to find, are there any weak points? Can I improve this? And basically, what's going to come out of this is I'm going to feel like, okay, I'm not able to improve this at all. Let's go forward with this model and start paper trading. So I'm going to paper trade for a month. And if that works reliably, then I'll put my own money into it. But if obviously if paper trading's not working, I'm not going to risk real money. And what else? What else is the key point here? Paper trading this. And if I am able to improve it, then I'll just have a better model that I'm more confident in. And it's not only beating the metrics, but it's beating the metrics by a bigger margin. That would be terrific. So I looked at the correlation of the features. Basically, you want to drop out highly correlated features of your data set, or trim the features, kind of make it so that you're giving your model the minimum number of features. And so I looked at this. I tried some different strategies. So the first one is this strategy here. Basically, you're getting pairs of highly correlated features above a threshold. I was using 75% for the correlation threshold. So I'm getting features that are above 75% correlated, pairs of them. And then I'm removing the feature that has the higher average correlation to the rest of the data set. And this is a standard practice in statistics and machine learning, data science. But then when I did that, the model performed worse. So I tried doing that same method of feature trimming and then saying that I'm not going to allow it. The LGBM naturally drops out some of the features as it's training and optimizing the hyperparameters. And so I said, instead of dropping features out from the hyperparameters, don't let that happen since I'm already trimming them and include all features. That performed worse than even dropping some of them. And then I looked at what if I increase the threshold from 75% to 90%. And again, 90% performed worse than all features, and it even performed worse than 75%. So this wasn't working. I looked at principal component analysis. So this is basically finding groups of highly correlated features. And instead of using those features, it's synthesizing them into a single feature. And you can see here that this performed worse than using all features. And then I went through and I got all of the highly correlated features. If I go through them one by one and try to drop them out of the data set, do any of these improve the model? And so this is 11 features here. 9 of the 11 features made the model worse on every metric. 2 of the features improved the model, actually, on the information coefficient. That's log ATR and the stochastic oscillator. And so these are giving a higher information coefficient. You see 0.0239 and 0.0234 as opposed to 0.0229. And so you think maybe this is improving it, but the problem is that the standard deviation of the information coefficient to information ratio, both daily and annually, and then the t-stat, those all got worse. And so basically what that means is I'm squeezing better returns out of the model, but I'm sacrificing the stability of the model in order to do that. And so that's not what you want to do. I want to improve the information coefficient and then also improve all of these other metrics. The conclusion that I drew from that, and I tried one more method of dropping features out of my model, shadow reduction. So you create a shadow feature for each feature of the model, and then you randomize the data. So you basically jumble the data in time so that it's not organized, it's not coherent, and that's going to give you random statistical noise. And then you take the best shadow feature, the best performing shadow feature, and any actual feature that performed worse than the best shadow feature, you drop out of the data set. But once again, you see that this made the model significantly worse. So none of these were working. I have this list of to-dos to improve the model after I got the really good model. And so now what I want to do is, what I'm working on right now is adding fundamentals to the data set. So I've incorporated the fundamentals. I've got the fundamental data out of my data, out of the SQL database that I'm using. I've saved it, and now I want to add features for all of the fundamentals. And so this most recent question is really, I have these new features. Is this going to be feature engine? Feature engine, I made all for price features. So all of those price features that I incorporated previously up here. That's what I made Feature Engine for. And so this was really easy because I have a price data set. And so all it has to do is go through and add the features to the data set. The problem now is these are fundamental features. And so the data sets are totally different. You know, you get the fundamental features I have are stuff from earnings reports. And then I also have earnings estimates. So the company will release earnings estimates as the quarter's going on to kind of try to give buyers and sellers a target for how they think the company is currently doing. And so the earnings estimates are happening every week. And then quarterly reports are only 4 times a year. And then, of course, price data we have for every day that the market's open. So the data sets are going to look completely different. So I want to know, you know, do I incorporate this into my existing feature engine, or do I need to add a new engine for fundamental feature engine? Okay, so I didn't give it the feature engine, but okay, whatever. It will be highly inefficient to do the data merging inside feature engine, but you should put the actual fundamental feature calculations inside feature engine. Here's the architectural breakdown. The problem, my merging is bad. Your feature engine is designed to be highly iterative. You'll run it hundreds of times to test out different moving average. No. That is not what I'm doing. Okay, so let me give it the code. This is feature engine.py. Look at how it works and reassess your answer. So I want to know, do I want to add these things inside of feature engine or outside? Scripts, feature engine, upload. Now we can run it and it'll upload and run. Real quick, I'm going to go to GitHub and I'm going to incorporate. So now I have this new script for getting the fundamental data. So I'm just going to add it to the GitHub so that you want your GitHub, you want to add things, you know, every time you add something new. You don't want to add a million new things and then upload everything. Oh, what's the best way to follow your project? Should I start watching your live streams from the first live stream? Or is there any better way to reduce time? Yeah, the live streams are probably averaging like an hour and a half long, and this is 90 days. So you don't want to watch like 150 hours. Also, if you watch well, that would be good for me, honestly, if you watched 150 hours, but I don't think that would be good for you. That would be, you wouldn't finish until the end of the year. You would never catch up, basically. What are you going to do, spend hours a day watching? Really, what I want to do, the best way to follow it, I mean, if you go to the GitHub, you basically have all of the code. I kind of click through this PowerPoint as I go, so this is like the whole PowerPoint that I've been doing since the beginning, so since I started this on December 27th. And I kind of click through it as I go, so you can kind of look at that and see, you know, I could just scroll through these. If you're interested in this, you can like kind of look at it later. So and then pause the video on each slide. So I'll just go through this. If you're interested, this is one way to look at it. What else is there? Oh, really what I want to do is I'm going to make a video once I finish this analysis of the model. And I'm going to talk about, you know, kind of everything that I did. And it'll be kind of a condensed down video. I don't know how long it's going to be. I hope it would be like 20 minutes. But it might need to go as long as an hour. Yeah, I don't know what the point of that is, but what really helps me out. Oh yeah, you already started the GitHub and everything, so never mind. Thanks, by the way. That really helps me if I'm trying to get jobs in companies or whoever's looking for a freelance coder. If they go to my repository and see there's a bunch of stars and people watching it and stuff, then that makes me look good. And they'll go, this guy's legit, let's hire him. Yeah, so I guess you could look through these slides if you want. This is really in-depth. In the final video I post, I'm probably not going to talk about the exact techniques that I'm using to get the model, because I don't want to give away the model. Yeah. And then, once I have a model that's working, and then once I'm using it for myself, I hope I'll have more YouTube subscribers and watch hours by that time. And once I get, let's see, I need 500 subscribers, and I I think it's 3,000 hours of watch time. Um, and so once I have that, then I'm gonna make memberships for the channel, and then anyone could buy a membership, and then part of the membership will be I give away the pics of the model for the day, and probably I'll go in and talk about like in depth, stuff that I've found, my findings. But yeah, that's basically it on that. So what I'm doing is right now I want to incorporate. This is actually going to be a huge improvement for my model, I think. So I have, like I said, I have all these features that are derived from the price data. Fundamental data is completely different from price data. Price data is often like responding to fundamental data. If there's an earnings report, the stock price will jump or fall based on the earnings report. But the earnings report is basically isolated from the price data. These are two completely different data sources. And so I really think once I add in this fundamental data, I'm going to get a significant improvement to the model. And the other thing I need to do is, make a bear regime model and make a bull regime model. And, the model should make money no matter what. So it should be making money, over the 2008 financial crisis, the 2018 downturn, the 2022 downturn. And if I get a model that works really well on those, then I'll be confident that I have a model for the upcoming crash. If it doesn't, then, I'm kind of going to stay out of the market until it turns around. Okay, so let's see what this says. You must keep the data merging outside of this file, but you should add the mathematical feature calculations to the registry. But if I add the features, it doesn't stay blazing fast. If I add the features before, there's an MSc in financial engineering offered by World Quant University. What is your thoughts about it? Is it good enough? I don't think anything. I think that stuff's kind of pointless, to be honest. Like, the best way to do it is like try to get a model. I've never taken any training or anything. I look how simple my PowerPoint was back in when I started this project. It's I knew a little bit about the markets, but really I think the best way to learn is you just try to start making something, and then you talk to some chat model and say, does this make sense? What are the ways to assess this? Just start with, how do I make money from the stock market with a quant model? What's the best quant model to make? What are the, different types of quant models people use? What are the languages people use? What's the, kind of everything. There's a guy who regularly views these streams, Sir Night Night, and he says he doesn't know anything about coding, and he just started using AI models to make a strategy, and he's written his strategy in Rust. So I'm using Python because I'm used to Python, but Rust is actually way more efficient when in terms of memory allocation and stuff. And so Rust is actually better, but I just don't. I also have this belief that you need to kind of have your head in the code. I think if I don't, somebody told me once, if you haven't written the code to do this was for physics, so not for quant stuff, but I think it still applies. And he said, if you don't know enough to write the code yourself to do the analysis, then you don't really understand it, which honestly, I think that's true. Oh yeah, I was just going to show this though. If you look at where I started, look how simple this is. I'm just looking at cumulative log returns. Here I'm looking at, okay, what if I compare the returns of different automakers over time? And this one didn't even work, but here's Ford returns versus a SPY baseline. Very basic stuff, very simple stuff. But it's things that are hard to make on Yahoo Finance. So I would say just start out, trying to make money, compare things, and build up from there. Keep asking, how do I improve? How do I improve? How do I improve? And then just work on it every day. That's the key, is you have to work on it every day. And basically it feels like you're hitting your head against the wall, making no progress. And then you get to a point where you're making progress, you have a breakthrough. And that is really terrific when that happens. Um, so let's go back to looking at this. The problem is, so it says don't perform the merge inside of feature engine. Um, uh, but I'm already performing the merge inside of feature engine. Hey, Sir Night Night. Um, isn't that a slow approach? Doesn't a guided mentor? The problem with a guided mentorship is like, there's no. I mean, AI will guide you. It will be your guide. It will mentor you. Um, cut the corners. It is true. I mean, it's good to like learn what quants do, but honestly, I think you could learn that. Like somebody suggested I think they suggested either the Stanford or MIT courses in quantitative finance. Go on YouTube, look up Stanford or MIT, and then like portfolio allocation, quantitative finance, and they have videos on there where they basically talk about all of the principles. And if you watch like it's probably like the Stanford one, I think, is like 20 classes, and it's like an hour per class. So you have to spend 20 hours watching videos. What's slower is finding a mentor worth a damn. Yes, that's exactly true. You know, what are they going to be telling you? Yes, I agree with Sir Night Night. And honestly, what I would say to do is make a YouTube channel and just stream the project on YouTube. Because since I started doing that, people like Sir Night Night have been commenting. And they just give you advice. You're hitting your head against a wall, and all of a sudden someone will comment, "Hey, here's what to do," or "Hey, did you try this?" And oh my gosh, that helps so much. That's like the best way to learn, really. And kind of you attract people who are interested in the project. You attract people who are working on the same thing, and like they like you because you're working on the same thing. You have the same ideas. I say the best way. This is true for anything. I think you just got to get down to business, get your hands dirty, and learn about it. If I add the features before I call feature engine, the data set will be huge because it will contain every day and stock about 2 million rows. And it will also have about 90 columns. Currently, the price only features are about 2 million rows, but only 5 columns. Additionally, I already have the merge happening inside of feature engine. When I run the engine to get the features, it returns a data frame with the desired features added. Yeah, that's all I'm gonna say for now. Reassess. The other thing is that I'm calling it inside. So in this sense, I think, oh, okay, well, I kind of want to make a new script. Instead of feature engine, I want to make like a fundamental feature engine script. But then the problem with that is inside of clean analysis, I'm using the feature engine to pull all of the fundamental, and I'll be using this method to. Hey, thanks, Sir Night Night. That's quite a confidence boost. Yes, that's exactly what it takes. I think you got to stick with it. The stick with itness. Um, well, thanks. I appreciate it. Yeah, and Sir Night Night just knows a lot. He's giving me really good advice. Yeah, obviously I don't want a giant fucking frame. Since you want to keep the main data set pristine and handle the logic. No, I don't want to hold the whole feature data set in a single data frame until it is in the model class. I don't want to do that until it's returning the final data set. I'm trying to follow this book, Statistics and Data Analysis for Financial Engineering by David Rupert, and finding it tough to follow. That's why I thought of enrolling in a guided course. Honestly, that's the thing about books, is books are always going to be hard to follow. There's always really good information, but there's also, the thing, honestly, reading books, you're not going to understand things until you try it. It's like working on a car or something. You could read books about working on a car for your whole life, and then if you're in front of a car and you have to work on it, you're not going to know what to do. You're just going to understand like the theories and abstract ideas behind it, which is really important. But the most important thing is, actually doing it. You learn everything the hard way. That's the easiest way to learn. And you have it in your head. It gets drilled into your head. And if you learn it the hard way, you'll never forget it. I know. Well, okay. Well, that's the thing. That's your whole advantage. Working solo towards a goal makes me feel nervous because of all the uncertainty involved. What if I'm not able to make it alone? That's how everybody feels. And so if you could just be the guy who tries to go it alone and you're fearless about it, that's the key, is you just can't have fear. So if you're the guy who goes it alone, there's going to be, for each one of you, there's going to be a million people who are afraid to go it alone, who are feeling like you feel right now. And that's going to be your edge. That's your advantage, is that you're not afraid. You dive into it. That's really the best way to go. And honestly, look at the goals, like I said, that I'm doing. One of the things is I'm incorporating everything into this GitHub repository, and I want to make a tool that's easy for anyone to use. So you can go, just download this tool, and you could start doing the same analysis I'm doing, and you've already built on all of the code that I've already written. So, if you just do that, you're already leaps and bounds ahead of everything. And then you just have to talk to the AI to see, does this feature matter? Does that feature matter? What kind of target do you think I should use? How do I split the data set? How do I isolate the universe that I want? Things like that. Perfect example for those who say AI will take over this and that. If you truly don't know what you're doing, the AI will just spit out whatever it thinks. Yeah, and then if you don't understand it, then you're hopeless. That's why you still need to understand everything. That's why AI is going to kill a lot of jobs, but it's not going to take all jobs away. It's going to turn teams of 30 people, where 20 people kind of just are lazy and sit on their ass. It'll turn the team of 30 people into a team of 2 people, the 2 hardest workers, the 2 people who understand everything and are able to leverage the AI models. Yeah, that's exactly right. If you don't push back, you're fucked. But it's really good for learning. So you could do it all in a chat model. You kind of learn, then criticize it, then learn, then criticize it. Yeah, AI is like having an assistant. It's like having a super genius who's your assistant, and it's free. Yeah, just leverage AI, man. And come here and comment, and then join the Discord. Talk about the problems you're having in the Discord, and people will help you. I'll help you. The key is you just got to get down to business, get your hands dirty, and do it. It's the best way to learn. All right, so where was I? Oh, yeah, speaking of the GitHub, go to the GitHub, download it. It helps me out a lot if you star it, if you watch it, and if you follow me on GitHub. That helps raise my coding profile, helps me get jobs and freelance gigs. Also, subscribe to the channel, of course, and join the Discord like I was just saying. Yes, there's no free lunch. You just got to get your hands dirty. Spend time doing it. You got to get time in the game and you'll learn. It really, I know like maybe a little bit of what I need to know. I honestly think if I do this every day for 2 years, I'll know as much as any quant analyst. So you do the same. You're 3 months behind me. So in 2 years and 3 months, in 2 years, you'll be a quant analyst, a pro quant analyst. You just got to stay on top of the game, stay fluid, be ready to learn. Okay, so blah, blah, blah. But the merge of the features into the data is already happening in feature engine. Won't it be easier if I create a new feature engine for fundamental features? Amazon just had big meetings with their devs because of the problems. Yeah, I saw that. What did the email say? It said, as you know, our website has sucked over the last 3 months. Look at the other side of that equation. The company Stripe has been using only AI to build their code, and they process trillions of dollars a year. Started to, hey, thanks, Sing. Yeah, so put something in the Discord. Hey, I'm getting started on my model. Does anyone have any advice on where to start? But really, the advice is going to be that go use some chat model and go hit your head against the wall for a while. Well, honestly, what that means is Amazon's team of devs was already enormous, and then you have an enormous team. Dude, the thing about enormous teams is not all the people are going to be good. Lots of people are going to be lazy. So you have all those lazy people. You should have seen last summer I was working on basically a coding app for work, and I got assigned somebody to help me with the coding app. And I'm not used to GitHub, like using GitHub with other people, so I let her just, commit whatever changes she made. And she just used ChatGPT to like make a bunch of changes. And then I went back like 2 weeks later to look at the repository and see how it worked, and everything broke. And I had to spend like another 2 weeks just cleaning up the crap and making it work again. So, AI helps a lot, but you really got to leverage it in the right way. If you leverage it in the wrong way, you're going backwards. It's a tool like everything else. You can build a hammer. You could build a house with it, or you can hit yourself in the head. Okay. So, yeah, I mean, you're right, Mick, but the thing is, like, companies like Stripe, um, yeah, using AI is definitely a skill, and I was afraid of it for like 2 years. I wish I'd dived into it sooner. Um, yeah, but that's exactly, the patching things to bypass tests, etc. You don't know there's a problem until something breaks. That's exactly right. But then, companies like Stripe obviously are leveraging it the right way, where it's like, testing and stuff. Um, okay, so I think I am gonna do that. I'm gonna go through make a new script for fundamental engine and a new class for it. And then I'm gonna have to change around how the model works. So I can't just add features and then add target. I need to add features, add fundamental features, and then add target. Um, but the add price features, add fundamental features, add price target, add fundamental target. Um, yeah, that's true. The best devs in the world have code issues. This month's machine learning street talk episode on Jeremy Howard was about coding is not equal to engineering. Yeah, I've never heard that. Street talk. Yeah.
Hey, so we gotta leave here at 4:45 in about 45 minutes. Because we're supposed to meet at 5:30 and we have to park, and I don't know what that situation is.
Okay. That sounds good.
So, and the dress is like casual, but maybe a pair of long pants because we are going to be. The windows are open. I don't know what it. It's
Okay.
Dress and liquors.
That sounds good. Um. Yeah, like I said, Sir Night Knight's written everything in Rust and doesn't even code. Okay, so I'm gonna make 2 engines. What bothers me is a narrative that is going to kill software development and this and that. Those of us that use the LLMs every day know that's not the case. Well, yeah, that's exactly right. But, that's what's exciting about it is that's what, whenever there's something that is obvious, if you use this stuff and you're interested in it and you're writing code and you know about code and you know about code bases and you're following the stock market, then you know for a fact that these LLMs aren't going to automate away all the jobs. On the flip side, they are going to have a big impact. So people love simple things. It's like extrema. It's like either this or that. And everyone says, oh, it's not going to automate the jobs away. Nobody's really saying that anymore. Or people, get doom pilled and they say, oh my God, it's going to automate away all the jobs. But neither is right. That's where we have the edge. We see it won't automate all the jobs away, but it's a huge tool. So all we have to do is use that tool and we'll be ahead of everybody. It's exciting. It's stuff not increases the need for AI does. Yeah, and really, it comes back to like everything else. Like, what matters is not like the being able to do this stuff. I've always thought this, like, so many things is like basically being a robot. It's that way in physics research, like lots of the analysis. It's like a robot could do this. But what matters is not, you could be the robot who knows how to do everything, but if you don't understand the big picture stuff, then you're basically useless. So it's the same thing, coding, now AI's made it so you don't need to do everything, like all the minutia. But if you understand the big picture stuff, that's what really matters. You can't be, breaking your code base every time because some AI model made some good. AI models are basically like shitty, like not shitty, but they're like engineers or like low level engineers, and you need some like engineering manager to be able to control them. And that's what it is now going forward. Is everyone's going to be a manager of different AIs. And that's even like better for us. That's like the hopeful scenario for AI is we don't have to waste our time, going through and finding bugs and correcting bugs. AI could do that crap. We care about the big picture stuff and building the apps. The most important skill is doing what Singh Javo talked about. Find a mentor, someone on YouTube and a book that actually knows what they're talking about and follow their work. Yeah, that's what's hard is finding good information and people that aren't just doing crap and people that aren't selling bullshit. But YouTube's good for that because you can tell who's selling bullshit and who's actually just doing stuff. I want the fundamental engine to use the same strategy as feature engine. First, I want to make feature requests. This makes the engine flexible and usable for any features. Additionally, it makes it easy to define new features in the future. The requests should then be passed into the engine, which the feature registry points to functions which contain the logic and calculate the features. The request should then be passed into the engine, which executes the functions and merges everything into a single data set. Oh, the problem is, damn it. Yeah, some functions are like if you're looking at price to earnings ratio, that changes every day when the price changes. Oh, so I need to think more about this. Address this problem. How will you deduce you're up with a working model if you're predicting how markets reacted to past events? Aren't you overfitting your model? When will you stop fine-tuning? What's the goal? Basically, that's what Sir Night was saying last night in the stream, is that I need to test for overfitting. So that's on my to-dos. Basically, so like I said, the model's already hitting every metric that I want to hit. So if you just look at it that way, you would say we have a good model. I don't think that's a robust enough analysis. And so I want to basically ruthlessly try to improve it. So these are the things I'm trying to do to ruthlessly improve it. Is I want to, everything in yellow I have to do, everything in green I've already incorporated. And so the next thing, what I'm working on right now is adding fundamentals, which is also going to add fundamental features. This is going to be the bulk of the work that I'm going to be doing right now. Adding the fundamental features is really going to take quite a bit. Like I said, it took me all of February to reorganize the code base into something usable. And most of that time was spent on incorporating features. So this is probably going to take a while, but I really think this has the highest promise for improving the model. And so before I conclude that my model's working, I need to add all the features that I can, which means adding the fundamental data and the features for it. And so I really think that's going to improve. So that's one thing I'm doing. And everything else is kind of just like tweaking the model. I want to add some macro features, so like the volatility index, interest rates, and credit spreads. And then I've already tried this, and I found that feature trimming's not working. I need to get the model to save, so I don't really care about that right now because I'm just assessing the model. But once I have a model that works, I need to save it so that I can kind of ruthlessly analyze it without training it every time, because that's what takes so long. Add an assessment class. Yeah, that's far off in the future. I don't care about that right now, really. Add sector information. Okay, that's like the second highest promise of improving, is if I either make different models for each sector, or if I just pass that in as a feature. This is what sector it's in. I think that's going to improve the model. Risk factors. I'm not sure if that will improve the model or not. That's something to try. Defining market regimes. That's pretty important. And I need to interpret those metrics. And then, like you just said, I need to check for overfit bias. And then once I have all that done, I'm going to be confident in the model that pops out of that. And so even if none of this improves the model at all, even if none of it improves the model, I still have this model, which is working really well. So I'm pretty confident in that. So even if none of this improves the model, I still have something that is hitting every metric that I want. And if it does improve the model, great, then I have a better model. And the real way to check that you're not overfitting before you risk real money is to test it on paper trading for a month. So for a month, I'm going to run it every day and see, how did this do? And then if it performs well over the month and there aren't, any huge drawbacks or anything like that, then I'm going to start executing it with real money. Okay, so address this problem. Address this problem when it comes to making a separate engine for the fundamental features. Some of the fundamental features like price to earnings ratio, require the price data, and change every day. Which engine should these types of features go into? And does this change the strategy such that I should actually incorporate everything into a single feature engine? Question mark. Okay, so we have 5 concurrent viewers. I'm going to take this opportunity to again say, please subscribe. Please go to the GitHub, download it, let me know how it works, give me some advice. Star the repository, that helps me a lot. Watch the repository, that helps me a lot. If you have some ideas for changes that you want to make yourself, if you fork it, that helps me a lot, makes the repository look good. And follow me on GitHub, and also join the Discord. All of the information for that stuff's in the description. Okay, so you've hit on the exact architectural edge case that separates amateur quantitative pipelines from professional ones. Because the numerator, so that's good. If I make a professional pipeline, that'll be a repository lots of people want to use. Because the numerator changes every day, but the denominator changes every 90 days, the feature itself changes every single day. Here's the definitive answer. Which engine should quantamental features go into? Features that change every day, like P to E ratio, must go into your existing feature engine. They cannot go into the fundamental engine. Does this mean you should use a single engine for everything? Absolutely not. You should stick to the dual engine strategy. Yeah, basically, because it's going to take up a gajillion megabytes of space. Okay, so here's the fundamental engine. What the fuck does that mean? Exponential EPS growth QQQ. Quarter, quarter, quarter. What is QQQ? Okay, so here are all of the features that I want. Update the script so that it includes all of these. Is it giving a feature request? Yeah. And then inside the feature engine, so compute for each request. Get it? Oh, so it's defining them as lambda functions because the fundamental features are actually really simple calculations. Okay, so now I'm going to give it all of the fundamental features that I want, and then I'm going to ask it to incorporate all of those. So where the hell is that? I need to know now. Know now. Can you love me again? I need to know now. Know now. Can you love me again? I need to know now. Oh, really? Okay, so I'll just add this right now. Oh no, that's the pipeline. I'll leave that off till later. First, I need to get the fundamental features and then be confident that they work. So let's make a new file. Call it fundamental engine.py. I need to know now. scripts. Good. Paste it. Save. Pipeline I don't need to worry about, so let's switch over to my other account and we'll get some more requests. I need to know now. Know now. Can you love me again? I would consider breaking the memory in your data to verify you didn't overfit. You can do this by putting gaps in your data and rearranging the data blocks. So like take 2 months randomly out of the data, and then put like 2019 before 2017. Is that like a really basic example of what you're talking about? No, I haven't incorporated that yet. Really, I'm just trying. I haven't gotten really to the robust analysis stage. I'm really trying to do get something that works. With like a really basic analysis of it, and then improve it, and then once I get something that works really well, then I want to do like a much more robust analysis for like verification. And then, my assumption is if I'm doing this really basic analysis where I'm basically trying to improve the information coefficient, the standard deviation of that, and the information coefficient to information ratio and the t-score, I'm assuming that that's going to give me a robust model, and then once I have that, then I could test it much more in depth. So let me write that down really quick. Overfitting test. Test data, remove chunks, move blocks, okay, so here's my code. I also included my model code, and engine for calculating k-fold cross validation. Leave one out, cross validations. Okay, k-fold cross validation. Okay, an engine for calculating price data features, which is called feature engine.py. Update the fundamental engine so it can calculate all of these features which I want to have. Okay, and then let's give it the features. I need to know now. Know now. Can you love me again? Okay, and then we need to give it the files. So clean analysis, fundamental engine, feature engine. That's going to be huge, but it's okay. So run it. I need to know now. Know now. Can you love me again? I need to know now. Know now. Can you love me again? All right, what time is it? I've got not much more time, maybe 10 minutes. Okay. Okay, I actually want to calculate all features which require price inside of feature engine. Leave that out for now. Only add features which can be calculated solely from the fundamental quarterly and yearly reports. Reassess. But it's used for validation data set when you want to select from a class of models which one is performing best and then go ahead with the test data for the final metrics. I still need to figure that out. So right now I'm just working on one model, but I think it very well could be the case that I want to use an ensemble of models. I just don't know how to split it up. It might be like, I have a bear model and a bull model. I might have a different model for each sector. And then I might just do some like classification, of like how different stocks look and get different models for each different kind of class of stocks. So I really don't know how I want to do it yet. Okay, let's see what it says. This makes perfect sense. Valuation metrics inherently depend on price or market cap, so they belong in your feature engine where the daily price data is actively handled. Here's the revised fundamental engine. All price-dependent metrics have been stripped out, leaving only the pure fundamental metrics that can be derived from standard quarterly, annual accounting data and event dates. Okay. So let's just put this in here. And the next thing I'm going to really have to do is walk through and test this. I need to do some robust tests to make sure that every single metric is being calculated correctly. So let me add this to the GitHub so that I have all my changes in there and you guys can access them. Like I said, please go check out the GitHub, download it, star it, watch it, and follow me. Also join the data retrieval. I thought I already added that. Get fundamental data. Ooh, no. Get fundamental data. I didn't do that. Did I? Okay, I don't know if I want to add that right now. That might be wrong. What's get fundamental data look like in here? Hey, thank you. I appreciate it. Keep watching, and you can see me succeed. All right, so data retrieval. Ooh, I don't have get fundamental data. Well, where did I add that? I thought I just updated that. Okay. Maybe I didn't add it. Okay, let's push it. And that's it for right now. Next stream, I'm going to be working on testing all of these features and making sure that they're working right in the fundamental engine. And then I need to add the logic for the feature engine to calculate the fundamental features, which require price data. And I might need to make a new engine for that, like a combined engine. And then I'm going to need to combine this all into a pipeline, which will calculate everything at once. And then finally, I'm going to need to update the model class so it will add these. And then the next step is add all of the fundamental features to the model. Maybe do a different model, like a fundamental model and a price model, and then kind of try to see, how does that perform? Can I squeeze out better performance from that? So thanks for watching. That's it for right now. Please subscribe. Go to the GitHub. Like I said, star it, watch it. Follow me on GitHub and join the Discord where we'll be talking about all this stuff. So that's it for now. Thanks for watching. Have a good rest of your day.
Hey, Pat.
Yeah.
Are you on your stream?
Yeah, but I just ended it.
Can I take Buddy for a walk while you
Sure.
get ready?
And then kind of try to see, how does that perform? Can I squeeze out better performance from that? So thanks for watching. That's it for right now. Please subscribe.